Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. All eyes were on the Bank of Canada this morning as it was set to make its interest rate announcement. With inflation at 4.8%, many were calling on the Bank of Canada to start the period of higher interest rates. Well, the markets have priced in 6 interest rate hikes over the next year, and the markets also figured on a 70% chance that the Bank of Canada would raise rates. Many were wondering if the bank would in fact move up its timeline, which had previously said they wouldn't be raising rates until April of this year. So what I want to do today is go over the Bank of Canada's interest rate announcement, discuss the implications both for the real estate sector and the overall economy, and then have a brief discussion over what to look for next. We do have an update coming out in short order, as the monetary policy report is also being released by the Bank of Canada, which will have multiple predictions for the Canadian real estate market in 2022. We also have a host of new real estate data coming out next week, as it's the beginning of a new month, so we'll definitely have updates on that as well. Click like and subscribe if you want to get those updates, but for now, let's get into this interest rate announcement. Well, I had predicted that the Bank of Canada would not be raising interest rates, that they would use Omicron and the state of the economy as a means to kick that can down the road a little bit further, as a means of delaying interest rate hikes. The bank announced this morning that I was right. I mean, they didn't put it in those terms specifically, but they did announce that they're going to be keeping their current policy rate at 0.25%.
What did I tell you?
So after months of will they, won't they, the Bank of Canada dropped the decision today that they won't they. Is that a thing? Does that work?
That's not a thing!
Well, they decided to keep their policy interest rate unchanged. But what does that mean for real estate and for the overall Canadian economy? Well, the Bank of Canada is delaying the rise in interest rates due to concerns over Omicron, the lockdowns, and the fragility of the economy. The decision to delay these interest rates could have long-term negative effects both on Canada's real estate market and Canada's economy as a whole. The Canadian real estate market shows absolutely zero signs of slowing down anytime soon. We are hearing reports from across the country that real estate prices continue to go up and up and up. In my hometown in London, it looks preliminarily, is that a word? It looks as though our prices have gone up almost 10% in the last month. Although we won't have the official sales data out until next week. Many were hoping that the raising interest rates would help at least slow down this market a little bit. Delaying this decision to raise interest rates is just going to put more fuel on the fire. Expect house prices to continue to rise, not only because rates are continuing to be low, but as we've seen in the past, when buyers are expecting rates to go up, they do tend to rush into the market to try to lock in those lower rates before rates rise. And as we've seen with the Federal Reserve, when the central bank takes too long to raise interest rates, when they take too long to make those hard decisions, then they have to move at a much faster pace had they have done the right thing earlier on. So housing prices are probably most likely going to continue to go up. And this is even more concerning when you consider an interview that came out with David Rosenberg, an economist that actually predicted the 2008 crisis. Rosenberg says that when the rates go up to what the market is predicting, when rates go up to 1%, 1.25%, 1.5%, that house prices will drop by 25%. Now, whether or not Rosenberg is accurate in his assertions remains to be seen and is definitely debatable. But that is a real worry with the Bank of Canada continuing to delay these interest rate hikes. If prices continue to go up and then the Bank of Canada has to turn on the brakes and turn on the brakes fast and start raising interest rates by half a point, a full point, 1.5 points in short order, in much the same manner that the Federal Reserve is going to be raising rates very quickly once they get started. If the Bank of Canada has to do that, we could see a sharp decline in housing prices. And again, as we said in this channel, I'm sure many first-time home buyers are cheering right now. Yay, it's about time. But the biggest issue lies is that if the banks, which have lent out all of this money over the past few years as home prices have gone up like over 26% last year, if the banks all of a sudden see all that value drop off their books, then the Bank of Canada has a bank problem. They have banks that are severely underwater. The collateral that they hold isn't worth the money that they've lent out for it. And once you get into those issues, then that's the kind of issue that we had in 2008. So the Bank of Canada continuing to keep interest rates low, continuing to kick that can down the road even further. Expect real estate to continue to go up, and I would suspect that as inflation will continue to go up as well, the Bank of Canada is going to have to put the brakes on and put them on fast once we start to see this the spring market come to fruition, once we start to see the economy open back up. And as for the overall economy, we were just talking about inflation. Inflation right now is at a 30-year high. It's at 4.8%, and I would expect it to continue going up. The Federal Reserve, as we talked about, took too long to raise interest rates to end its quantitative easing program. As a result, the U.S. right now is at its highest inflation rate in 40 years. It's at 7%. Canada's at 4.8%, but without a higher cost of borrowing, we could be inching towards that 7% mark any month now. And that's definitely one of the biggest worries for the overall economy. There was a recent poll done with Canadians, and they are more worried about inflation than they are worried about the cost of borrowing. And this comes at a time when some are saying that Canada, due to its debt load, is going to have to be the most aggressive central bank in hiking interest rates out of all of the G7 countries. So as the Bank of Canada kicks that can down the road, as the Bank of Canada leaves it until March, I would estimate that they would start rate hiking in March once hopefully Omicron has reached its peak and started to subside. Even if it hasn't already, I would assume that they would start looking to hike in March, which coincidentally is also when the Federal Reserve is expected to hike their rates. One note, the Bank of Canada is very aware, especially when you look at the TSX and what happened in the stock markets this week, that our current market is very fragile, that our economy is very fragile. While we have talked a lot about why the delay in raising interest rates isn't great for the real estate market, for the economy, there is another side to this. There is a side that says that had we have raised rates before the Federal Reserve raises their rates, it would have put a lot of upward pressure on our dollar, which would have made our exports to the US much more expensive. Given that the Bank of Canada has at least a half a mandate now to look after employment, to look after jobs, then they very well could have been thinking that they didn't want to see our dollar rise too much relative to that of the US, as it would hurt our exports and it would hurt our jobs market. So they very well might have been thinking that they really want to wait until the Fed moves to raise interest rates, which, as we said, does come in its March meeting. The Fed does have a policy announcement coming out today at 2 o'clock, but it's highly unlikely that they are going to raise rates. Of course, if they do immediately or soon thereafter, we will have an update on this channel. And as mentioned, we will have an update on the monetary policy report and its real estate predictions coming out. Actually, it's out now, but I can only do one video at once. So we will have that released in short order. Click like and subscribe if you want to get those updates. And thanks so much for watching.